Right now, right now. 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 Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We've got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government has been getting bigger. Hey guys, what's going on? Jeb here, and welcome back to Coffee and Crypto Live. This is your week daily morning show where we bring you the latest in everything Bitcoin and cryptocurrency. And in today's episode, we are going to be talking about the next major movement for Bitcoin, because I believe that Bitcoin has been going through a setup over the last 2 months, ever since BlackRock, the king of ETFs, announced that they would be building a Bitcoin ETF and trying to get approval for it. Bitcoin went into a major rally. It's been trading sideways ever since, and I believe that the next major movement for Bitcoin may be less than a month away. We've been talking about the later part of August, moving into the beginning of September, being the season that Bitcoin will likely see its next major movement. And in today's episode of Coffee and Crypto Live, we're going to be taking a closer look at the technical reasons why that movement may be coming sooner than you would expect. Really appreciate all of you guys for tuning in today. Crypto Mini Bike was first in chat. Said, morning, everyone. Good morning to you as well. Crypto Mini Bike. Bob Riley is in chat. Said, let's go. Thomas Post is in chat, said, morning fam. Good morning, Thomas Post. Queen's in chat. Delacroix is in chat. Drizzy Drake is in chat. Queen's in chat. Joe Bollier, Chasse, Robert Kehoe, Alex Nybo, William Wilson. I almost said William Nelson. Willie Nelson. William Wilson, I'm sorry, is in chat. And MS is in chat, said maybe. Good morning to everybody. Hopefully you guys had a wonderful, wonderful weekend. Excited to jump straight into it today and get some content out there. Let's start over on CoinMarketCap today. Bitcoin has been more or less trading sideways again over the last several days. Ever since about Thursday, we've been seeing a major movement for Bitcoin of sideways. We've seen basically nothing going on Bitcoin price action-wise for now, but as we're going to find out today, that is going to change sooner than you might expect. The Fear and Greed Index is sitting at a perfect 50, and many of our oscillators are doing the exact same thing. Looking at the Bitcoin market, we know that Bitcoin's oscillators are basically sideways because that's what happens when the market trades sideways. MACD has been moving almost perfectly sideways for several months now. And same thing with RSI out here on the weekly chart. Even on the daily chart, RSI and MACD are basically completely flatlined, sitting at almost zero. When we look back at CoinMarketCap, we can see that it's not just Bitcoin that's sideways, Ethereum's sideways, Binance is sideways, XRP is sideways, everything's pretty much sideways. But again, this doesn't mean the heat death of crypto. This doesn't mean that that all the energy in cryptocurrency is bled out and it's just gone. It means that Bitcoin and cryptocurrency are going through a consolidative movement, preparing themselves time-wise for the next major movement. And as I said, I do believe that that'll be coming probably sometime in the next month or so, based on the market cycles that we have to deal with so far this year, and also based on the general market cycles that Bitcoin experiences over the course of the last, 13 years of price action. So let's start with the Bitcoin market dominance. Right now, Bitcoin's market dominance is sitting at 48.8%. And I think it's very important to pay a close attention to the market dominance of Bitcoin, because Bitcoin is the Mac Daddy, granddaddy of them all. It is the creator of the entire cryptocurrency space. And whenever you look at crypto, you have to first look at it through the lens of Bitcoin, because Bitcoin is the creator of the entire sector that is cryptocurrency. Over the year to date so far, the last 8 months or so, Bitcoin has been going through a rally as the others category has been getting shredded. This comes with a couple of implications. First and foremost, it implies obviously that Bitcoin is performing very, very well. Obviously, Bitcoin is outperforming everything else because it is managing to not only hang on to its market dominance, it's also managed to grow its market dominance. Market dominance was at 38.5%. It's rallied all the way now up to 48.5%. a general uptrend that has led to the others category moving down. Ever since roughly the collapse of FTX, which happened on November 8th last year, election day, midterms day, we saw Bitcoin's market dominance was at 38%, others was at 20%. We've seen a stark drop on that. Others is now sitting at 14%. We've also seen the bleeding off of the value of several other cryptocurrency projects, such as Binance. It was sitting at 5.35%. Now it's down to 3.2%. Of course, some of the stablecoins have lost a little bit of market capitalization as well. That's a trend that I think is very important and significant because Bitcoin gaining market dominance and the others category losing market dominance means largely two things. Number one, it means that the world is starting to realize the value of Bitcoin. It shows a resiliency in Bitcoin. Yes, Bitcoin has rallied on market dominance, but it's also rallied in price. Ever since that bottom, we have seen that Bitcoin's market dominance has rallied, but so has the value of Bitcoin. Originally, Bitcoin dropped down to about $15,000 post-FTX, but it also managed to rally $9,000 to where it is right now and over $10,000 to its eventual high that was put in place just a couple of weeks ago at $31.5K. By the way, a side note, I know Bitcoin's been trading sideways for a while, but let's not forget that we are only 1 month removed from the yearly high for Bitcoin. Don't forget that. It's very important to not forget our context. As Bitcoin's market dominance continues to move to the upside, it signals a interest in Bitcoin from the other sectors of the economy that are not currently massively invested in crypto. It's not just the people in cryptocurrency that are buying Bitcoin. There's also quite a lot of interest from the retail in Bitcoin right now, and we're seeing an increasing in that. Along with the price going up, we're seeing an increasing in the retail for a couple of other reasons. One of the reasons that we're seeing an increase in the interest in Bitcoin has to do, paradoxically, and this is something that I want to talk a little bit more about, with the advent of artificial intelligence. We've seen a huge growth on artificial intelligence over the last several years. I've been telling people for 10 years that artificial intelligence was going to become a problem, and yes, I know I was 12 back then. I've been telling people for almost half of my life that artificial intelligence was going to move into the place that it is now. And artificial intelligence, if you don't know what's going on, and you might think, oh my gosh, Jeb, how does this have anything to do with crypto? This actually might be one of the biggest drivers of investment in crypto over the next decade. So just keep that in mind. Artificial intelligence right now is reaching what many people would call the singularity. It's not there yet, but where artificial intelligence will get to the point where it is able to expand its own intelligence, its own knowledge base, and its own capabilities much faster than humankind can. Artificial intelligence is actually in the place where you can use it to replace all kinds of jobs. We're talking about something called a specialized artificial intelligence. You can use it for creating images. You can use it for writing scripts. You can use it for all kinds of things. You can use it for bookkeeping in the future. You can use it for right now doing you can use it for processing very complicated requests. There are people that can use certain things like a GPT-4, the most recent artificial intelligence released by OpenAI, which is not very open. You can use it to solve net worth issues in your own personal life or in your company. You can use it to analyze the kinds of revenue streams that a company has and which ones are lacking, and it'll give you all of this different information. Obviously, we know that artificial intelligence has been able to beat every single master of every single different kind of board game that exists right now, chess and Go being the two biggest ones of biggest note. Artificial intelligence is by the day, by the week, moving at the most rapid pace that we've ever seen. If you look at a chart, I don't have the chart in front of me, but if you look at a chart from the last 3 years, since about the pandemic, the amount of research papers and the amount of growth in the output of artificial intelligence has gone exponential on a logarithm chart. So it's reaching explosive levels. In the next probably 3 to 5 years, you're going to see artificial intelligence disrupting the economy in a way that we have not seen since the internet, and it's going to happen a lot faster than that. And when that happens, coupled with many of the other longer-term fundamental forces that we've talked about, such as the Russian war against Ukraine and the disruptions to the Black Sea that are going on there, that disrupts a huge amount of raw resource outputs in that sector, in that section of the world, as well as what's going on in the China sphere. President Xi Jinping is in a cult of personality. Nobody can get information to him. And so anybody that brings him information that he doesn't like, he just kills them. And so he doesn't have any idea what's going on in the world. So China is this super state run by somebody that does not understand anything about the outside world because he doesn't want to hear it. It's very dangerous. You're at the same time seeing the open wound of the pandemic not properly healing, and you're seeing a huge amount of industrialization going on in the United States. Every single one of these facets lead to instability. And every time throughout history that you've seen civilizational instability, it has always led to massive inflation. It has always led to instability in the currency. When you see instability in a currency, when you see inflation in a currency, where do people turn? They turn to uninflatable assets. Before the dawn of Bitcoin, the only thing that you could really turn to was real estate and gold. That was about it. And those are not perfect examples because somebody can come and steal your gold and somebody can come and steal your real estate. If you set it up correctly, nobody can steal your Bitcoin. On top of that, Bitcoin is the first truly non-inflationary asset in the history of mankind. Land, as the Chinese have proven, can be created. Land can be found by, not found so much, but brought into use case by more efficient agricultural methods, and then you build a subdivision where you used to have a cornfield. Land is something that you can actually get some more supply of. You can't do that with Bitcoin. And so with the advent of artificial intelligence, with what's going on in Russia and Ukraine, with what's going on with China, with what's going on with the massive amount of industrialization in the United States is leading to inflation, all of these are destabilizing factors in the world, which lead to destabilization in the dollar and in other sovereign currencies. And so when people look at Bitcoin, they see a solution to the problem of unstable currencies, and they realize that in an unstable 2020s, as the world is going through the biggest seismic shift that we have seen since probably the 90s with the fall of the Berlin Wall combined with the collapse of the Soviet Union and the dawn of the internet, this is going to be one of the most destabilizing decades that we've seen in a very long time, at least since then, maybe even since World War II. And on a very different scale, on a very different level. We're not just talking about borders changing. We're not just talking about huge wars. We're talking about a fundamental technological change. Orders of magnitude more significant than the advent of the atomic bomb. The level of instability that will bring is going to bring instability into the currency, because the currency is simply a reflection of the people that use the currency, the people that manage the currency, and the people that trade in the currency. That is only true because the supply is fickle, because the supply can be manipulated. To create a system that is able to function on a global scale, you need to have some degree of flexibility with the currency. So I'm not saying that Bitcoin is going to take over and become the new United States dollar. I don't know that that system would work simply because it's a very complex system and Bitcoin cannot be controlled at all. So nobody would probably adopt it for that. But the individuals, the retail, are going to realize the dollar is not as stable as I thought it was. They're going to look for something. What are they going to look for? They're going to look for the first thermodynamically sound, superconducting digital asset in the history of mankind. You've heard me say that before. Superconducting, you can move it anywhere for any cost with no restrictions, more or less, and it's thermodynamically sound in that it's not going to lose any of its value. All of this leads to a huge incentive to buy Bitcoin over the course of this decade. This is going to be a wild decade. This is going to be a decade that is going to change the landscape of human civilization forever. The world is not going to look the same in 10 years as it does now, and not just in the way that it doesn't look like what does the fox say in 2023 in the same way that it looked in 2013. I'm not talking about some cultural changes. I'm not talking about you having a fancier camera on your smartphone. I'm saying the world is going to be fundamentally different in a way that we cannot even come close to comprehending, geopolitically, technologically, economically, and societally. Much of that is going to be driven by the rise of artificial intelligence. Much of that is being driven by the changing of the geopolitical landscape, and much of that is having to do with demographics, and some of it is going to have to do with Bitcoin. And so that's kind of the longer term picture that we keep looking at, is that this is an extremely disruptive decade. There are decades where you have golden ages and it's just growth. And whatever you have going on there is just going to be 5 times bigger by the end of the decade. This is a decade where some things that are massive right now are going to cease to exist by the end of the decade. And some things that are niche right now and they don't seem like that big of a deal are going to dominate human civilization by the end of the decade. Artificial intelligence is a good example of that. Some of the things that exist right now and are very powerful and probably won't be by the end of the decade are things, for example, the Russian sphere. So how does that apply in the shorter term? In the shorter term, most people don't realize this is happening. And this is where we start to talk about Bitcoin. In the short term, most people don't realize all of these trends are happening. Most people don't realize that in 3 to 5 years, about 30% of jobs are going to disappear and 70% of jobs are going to look vastly different than they do now. And if you want to be successful in the future economy, you're going to need to learn to use artificial intelligence and leverage artificial intelligence to your advantage. Most people don't realize that. Most people don't realize that the war in Ukraine and the pandemic brought such seismic disruptions to the global supply chain that it is fractured in a way that it probably will not heal for 30 years if things are stable, and as we're talking about, they're not going to be. Most people don't realize that. So there is a significant amount of geopolitical and economic and market instability coming. Bitcoin is preparing for that because Bitcoin is going to have the opportunity to seize the day on that. When the stocks get hit and when the real estate market gets hit and when these markets struggle, and they will, Bitcoin, I believe, is going to be in a great position to capitalize on that. Because as people realize, wait a minute, I'm not so sure about this economic model. I'm not so sure about these currencies that have been inflated and deflated and interest rates go up and interest rates go down. I'm not so sure about this system of humans controlling the currency. I would rather work with a currency that acts more like a force and a law of nature that cannot be manipulated and is a stable, steady state system like Bitcoin is. Then you're going to start to see defectors. I'm not saying that people are going to abandon the dollar fully, but I am saying that as the flaws in the system start to reveal themselves, it is going to become more and more and more necessary and popular for people to have some portion of their investments in specifically Bitcoin, and then also, yes, in the altcoins. I'm not a maxi. I'm not a Bitcoin maxi. Never have been, never will be. But specifically in Bitcoin and then in the altcoins in that order, because the single largest economic concern that any cryptocurrency can solve is the one that Bitcoin is solving, and that is the instability of currencies that are managed and manipulated by humans. There are benefits to managing a currency by humans, but there are plenty of drawbacks as well. And one of those is the instability that has wrecked millions of people throughout history. There is advantages in the market, in the stock market, and there are advantages to the traditional economic model, and there are advantages to Bitcoin, and Bitcoin is going to come in and it's going to be able to supplant some of those disadvantages, and it's going to take, if you want to look at it this way, market share from the traditional way the market works. Now, how does this apply to Bitcoin? Over the next several years, things are going to get more complicated. Things are going to get more, how should we say, chaotic than they are now. Many people, especially people that are not very well attuned to this, and typically we're talking about the poor and the middle class in the United States who just go and they live their life and they don't think about the longer term trends. They don't realize this is happening. All they see is that there's a war in a far-off country. Oh, I'll send some aid. Oh, yeah, relief for Ukraine. Yeah, I'll help them out. Oh, China. China's China. Artificial intelligence. We've been hearing about that for 30 years. I watched Terminator. Everything went back to normal. Pandemic ended. That's what affected me. The pandemic ended, and so now everything's going back to normal. It's time for me to go back to spending the way I was in the 2010s. The 2010s were a golden era, unprecedented in the history of humankind. And that's kind of difficult for me to see because because everything after 2008 up until 2019 were probably the 11 most prosperous years in the history of mankind. And those years are over. And as somebody who's 22, I'm turning 23 this month. As someone who's 22, I have to look back and study history to realize that, because that's all I remember. I don't remember much from before 2008. I remember when 2008 happened. My dad told me, man, the economy's terrible right now. I said, Dad, where's the economy building? I'm going to go up there and kick their butt. Man, they're messing with my dad. I was 8 years old. I'm dead serious. That's a true story. Because I didn't know, right? I remember about as far back as the recession. I do remember the recession. I know what caused the recession. I've studied the history of it. But in my life, that's my experience. And for many people, if you're under the age of like 40, that's about the experience that you have post 2001 of this just beautiful golden age of humankind. That is starting to unravel in a way that I think it can re-ravel itself, but many things are changing, and it's not going to be as much of a golden era as it was in that time. And there's a transition that's going to take place. As still can't say it on YouTube. As the pandemic ended, things started to go back to normal. Things never truly went back to normal. They never will. They can't. The world is forever changed. But many people believe, oh, things are normal now, and they're resuming their old habits. And so they're going to get blindsided when in the next 3 to 5 years, maybe sooner, many of these realities start putting pressures on the economy, and they wonder, why is this happening? Why am I losing my job? Why is my tech company not growing at 30% every single year? Why is my pension not working the way that I thought it would? Because they don't offer it anymore, because the company doesn't have as much money. Why is food so much more expensive? Why can I buy half of what I could before at the grocery store? I mean, I know I got a little bit less every year, but golly, I can buy half of what I could buy. People are going to wonder what's going on. And those stresses and those pressures on the economy are going to lead to two kinds of outcomes. And those are the outcomes I want to talk about today. Either one, they're going to lead to an outcome of despair and fear and paralysis of analysis and cowering and shrinking and shriveling and being left behind. Or It's going to lead to people that embody a biblical principle, which I preach and talk about all the time, the spirit of challenge, dominating in that field. 2008 was one of the most disruptive events in our lifetimes. No matter how old you are, it's one of the most disruptive events in the lifetimes of anybody that's alive right now. But to the people that were ready for it, to the people that had the money in cash reserves to capitalize on an opportunity, you know, some percentage of their wealth, to the people that had their debt paid off and they had a huge amount of cash flow, to the people that had strong financial sovereignty systems, strong control systems, strong budgeting systems, strong organizational practices, strong habits in place. 2008 actually presented an incredible opportunity. It weeded out the people that were prepared and the people that weren't. And I'm not here to bash anybody that lost in 2008 because people got wrecked in 2008, including my very own family. All I'm saying is not from a moral standpoint, you're good, you're bad. I'm saying that when 2008 happened, the people that were ready made a lot of money. There's a story that there was a construction company, and this construction company obviously was one of the hardest hit during 2008. But they had cash on the side. They had a emergency fund, if you will, a runway, and they had a very good reputation and a very strong business model. And most companies had to downsize their workforce by over 50% during 2008 as a result of the housing crisis that was going on. This construction company decided not to do that. They kept all of their payroll, kept all of their staff, and ran a loss because they knew it would be temporary. Bought a lot of real estate, built a ton of homes, and they ran a loss for about 18 to 24 months. And on the other side, they had tripled their market share because they didn't downsize, because they had money in the bank that allowed them to have that runway. They lived on a runway for a while, not because they were bad business, not because it was a poorly run business, not because it was an unprofitable business, but because they were using a strategy, and it worked. Toyota did the exact same thing. Toyota was the only automotive manufacturing company in the United States not to lay off people during 2008 because they knew it was temporary, and they knew it would turn around, and so they were able to increase their market share when the market came back. And for you and for me, when the next financial crisis happens, because it's probably not going to be 10 years from now, and it's probably also not going to be as deep as 2008, and it's probably also not going to be just one cataclysmic drop. It's going to be a gradual movement. When that occurs, and I think it'll probably start sometime in the next 12 to 18, maybe 24 months, I think it'll probably also coincide when interest rates come down and artificial intelligence starts to really disrupt things, probably in about 2 years from now. Then a few things are going to come together. Number one, interest rates are going to flatline, and then they're going to more than likely drop. When that occurs, everybody who owns a home right now and does not want to be in that home is going to sell their home, and they're going to move so they can lock in a lower interest rate, because nobody wants to leave a 3.125% interest rate and move somewhere else and have to get an 8% interest rate on their mortgage. Nobody's going to do that. If they had enough money, then either one, they could pay off the house and just pay for the house in cash. That's not the way Americans typically do it. Or two, they could just rent the property and then let somebody else pay the mortgage and make sure there's a large enough principal. They refinance it, low payment, so that there's a buffer there, and then buy somewhere else. Again, most Americans are not in that situation. So when the interest rates come down, many people that wanted to move, that haven't moved yet, are going to move, and that's going to cause a huge amount of sell pressure on the market, which is going to tank housing prices. And then if you're on the sidelines ready for that, that's going to help, but it's going to lead to a massive drop in the economy. On top of that, you're going to see artificial intelligence start to become commercialized and put out in a way that can start taking people's jobs. It is only a couple of years away at this point before many menial tasks, menial jobs will be automated. It's already happened in many regards technologically, but not so much artificial intelligence-wise. Monday.com, that used to be a job. Your email, that used to be a job. Somebody used to get paid hourly to do that, right? Somebody used to get paid to do the organization of files that you now just do in Microsoft Office or in Google Google Drive. That used to be a job. A lot of jobs are going to get disrupted. And at the same time, you're going to see Bitcoin in a bull market. So again, how does this all tie into crypto? Let's start pulling the dots. Let's start connecting the pieces here. We know that there is a huge amount of economic disruption coming, and it's going to look probably something like 08 is going to probably look something like the pandemic. I'm not saying that the world won't get through it. I'm not saying it's going to be the end times. I'm not saying that it's going to be the end of a modern civilized life as we know it. I'm not saying that Terminator is about to start being filmed, but this time in real life. I'm not saying that Christopher Nolan is going to make Terminator 4, Terminator 5, whatever they're on, +1 in real life. What I am saying is that we are going to see a huge amount of disruption this decade. It's going to put pressure on the economy, and that pressure is going to be positive for Bitcoin. So let's talk about that from this perspective of Bitcoin. Bitcoin is in the middle of its 4-year cycle. As you know, Bitcoin every 4 years has a halving event. This is basic history. I'm sure you already know this. I have charted on this chart right here the different halvings that have taken place on Bitcoin. The one that really starts to matter, there's one in 2012, but the one that really starts to matter is in 2016, June. Another one happened May 11, 2020, and then another one is expected to happen in April of 2024. We expect that Bitcoin will be trading above $35,000 by year's end. And I still stand by that prediction. That's a prediction I made in March, and I think it's still going to play out. When Bitcoin is at that level and is moving towards the halving at the end of Q2, I'm sorry, at the end of Q1, beginning of Q2 next year, we don't know the exact date yet, but it doesn't really matter what the exact date is. When that occurs, Bitcoin is likely going to start to see a lot of adoption. Why? Interest rates will have been paused. Inflation is probably going to be rising again. We've talked about in other streams why inflation is probably not going down to 3% and staying down there for a multitude of reasons. A lot of it having to do with the economic build out in the United States and the onshoring of so much petrochemical production leading to a lot of inflation in the United States economy. You're going to see quite a lot of inflation in the U.S. markets and in the dollar. All of those are pressures very akin to what we saw back here and back here. During this time, Bitcoin was slated for a bear market. Many of the things that happened in 2022, if we weren't already slated for a bear market, if we hadn't already gone through a bull market, probably would have been very bullish factors. Because we were in a bear market, they exacerbated the bearish factors because people didn't look at it as an opportunity. They looked at it as FUD. Oh no, the United States dollar is massively inflating. Then I want to go ahead and be safe and I want to get out of my risky assets because they're dropping. If Bitcoin was rallying and inflation was high, then people would have dumped a ton of money into Bitcoin. If Bitcoin was not already in a bear market because it already had its bull market, 2022 probably would have been a very bullish year. But all of that pressure is built up and is still here. Many people think things are going back to normal and they're not. And as they start to realize that, because they're going to be forced to realize that because you can only live in La La Land under a rock for so long before the world comes a knocking, then they're going to realize that they need to put money into something that is inflation hardened and something that is stable, a currency that acts more like a force of nature than a pawn of a government far away that pretends like it's elected but really truly isn't. That's where Bitcoin comes in. So there is a major Bitcoin setup unveiling itself right now. And if you're enjoying today's stream, make sure to hit that like button, by the way. Let's see if we can't get over 150 likes. Thank you guys so much. I believe that in the medium term, short to medium term, talking about the next few months, Bitcoin's about to go through one of its next major movements. So again, just kind of starting with a clean chart here. That's how I like to do it. We see that Bitcoin currently is following this major uptrend, and we've also got this large level of support at 28,545, which is very important. Bitcoin's above both of these levels, and there is a good chance that it will stay above both of these levels. The two outcomes that we need to pay attention to here are thus: either Bitcoin holds these levels and rallies, or Bitcoin falls down to another level of support and rallies. But likely, as we're approaching the halving, we're going to see another rally. I'm not too much in the camp of it just dropping down to like $20,000. It's possible. I don't see it in the data, personally. It could happen. I don't see it. It's not what I think is most likely. Whether we drop down to 25,000 first and then rally, or we just hold above 28 and rally, I don't really care. It changes the date of when this rally occurs, but it doesn't change that it's coming. Bitcoin has so much going for it right now that it didn't have going for it a year ago. A year ago, there was not much news about it, and it was surrounded by the dumpster fire that many different cryptocurrency projects had placed at its doorstep. The collapse of Luna, the collapse of FTX, the collapse of Celsius, the collapse of 3AC, the collapse of all of these different cryptocurrency projects which were built with toothpicks and duct tape fell apart and put a bad image on Bitcoin. But let me just tell you something. Trust takes time to build, and all of those projects collapsing broke the public's trust in Bitcoin. But then a year later, Bitcoin's doing the exact same thing it was doing a year ago, and people realize, wait a minute, it wasn't Bitcoin's fault. Bitcoin didn't deserve to suffer because FTX went down. Bitcoin didn't deserve to suffer because Luna went down. Bitcoin's a force of nature. It's a little bit like saying, hey, that lion ate my sheep, so therefore gravity's at fault because the lion like fell on it or something. It's just ridiculous. It's not Bitcoin's fault that all of those things took place. Bitcoin is the exact same today as it was when it was created, barring a few technical upgrades. It's a little bit like the principles we teach. It's like financial sovereignty, sustainability, the importance of balancing your family and your work, the importance of unity, the importance of commitment, the importance of not making decisions based on fear, of having the spirit of challenge, the importance of marketplace service, the importance of all those principles that we teach. They are timeless and they do not change. They are the exact same day in, day out, and Bitcoin's that, and the world is realizing that. And so I think Bitcoin is in a healthy position to have a healthy uptrend. I don't see just a cataclysmic crash on Bitcoin happening. And if a cataclysmic crash happens on the markets, which I don't think is going to happen in the next 12 months, I think you're going to have some degree of stability, at least for the next 6 to 12 months, and then maybe a reckoning comes. But at least for now, I think that you're doing okay in your stocks. Bitcoin is seen as an opportunity by many that are starting to realize, whew, this world is not as stable as the one that we witnessed in the 2010s, late 2000s, and early 2010s, barring the black swan of 2008. And so I think that a rally's coming. Again, there's two ways that can take place. Either one, that rally will break us above 31.8, our current yearly high, relatively soon, because we'll follow this uptrend and we'll be forced to rally. And that could happen by the end of September. That could happen within a month. Within a month, we could be up here knocking on 31.8K's door. Or two, we break down here and we... or actually, there's three scenarios. Or we break through the uptrend and we hold at 28,545 and we trade sideways. Or we fall down here somewhere above 25. I'm somewhere in the middle. I think that Bitcoin may have a difficult time just holding this uptrend because it is pretty steep at this point. But Bitcoin surprised me before. I think that it's somewhere in, let's just make it simple. Somewhere in here, Bitcoin's going to find its bottom. Might be here, might be here, might be here. I'm not too terribly concerned or care too much about the exact prediction. The thing I really want to get right is the general consensus. I think somewhere in here, more than likely, Bitcoin's going to fall and is going to fall into there somewhere. And then we're going to start an uptrend at some point. At this point, at the earliest in late August, early September, moving into potentially even October. And I think that'll probably come out of nowhere. You'll probably see some kind of big news event that we cannot foresee because it's private and maybe 5 people know about it right now. And it'll come out. Either BlackRock gets approved for an ETF, probably won't happen this year. The SEC has, I think it's like 240 days to approve or deny an ETF, and they almost always wait to the last minute. So we'll be getting a decision on that ETF, hopefully an approval, early next year, more than likely. So that probably wouldn't be it. But something could come up. White swan event, theoretically, because it'd be good. It would lead Bitcoin to the upside, and then Bitcoin will capitalize on all the technical factors I'm about to show you, and it'll go through a rally. Our job right now is to be prepared for that. How do we prepare for that? Well, on a broad scale, you start off, and there's going to be a few principles of financial sovereignty here, and I'm just going to kind of start out broad, drill down specific. Broadly, the first thing you need to do is bring financial sovereignty into your life by having a budget, a plan for your money, and you need to make sure that you have your income figured out, your monthly necessary expenses figured out, subtract those, get your discretionary income, then split your discretionary income based on ratios, and I've talked about this in other videos. I'm not going to go too much into this as a high-level overview. Split your discretionary income, what's left over after you pay all your necessary bills, your utilities, private school payment, car payment, house payment, groceries, doctor, all that stuff, insurance. Your discretionary income, split it up into your wants budget, your investment budget, and your generosity budget. Then in that in that investment budget, figure out how much of that is going to paying off your debt and how much of that is going to investing in the market. And then make sure that you have some money on the side. I think it's a good idea to stockpile a little bit of cash on the side. I'm not this person that says you should just keep cash. But right now, when you can get 4.5% to 5% in a savings account or in T-bills or in a money market account, it's not a bad idea to have some money on the side in case an opportunity presents itself. If Bitcoin drops down to $24,000, then boom, you're ready to dive in. If not, set up an either weekly or monthly investment. I would think in the stock market, I think it's a good idea to have some investment in the stock market that's continuing. And then also in crypto. I'm a proponent of both. Have an investment in crypto that you're putting money into every month and you're continuing to invest in. And then as Bitcoin goes through this dip, if Bitcoin is sitting down here, then you're investing every single month or every single week. Every Friday is best. And that day is statistically significant. Friday is the best day statistically to buy Bitcoin. Is statistically the cheapest that day because people get paid for it, and specifically Friday morning. If you can, set that up wherever you're doing it, because Fridays, people get paid, then buy pressure comes in the market, and by Saturday, it's the highest value day on Bitcoin. So you almost always see, statistically speaking, a bump in the price late on Friday moving into Saturday. It's also the weekends. People are off work, and they're more likely to look at Bitcoin because many of them are hobbyists. Then you'll be able to capitalize on this dip and be ready for this next movement to the upside. If you're wanting to look at from a trade setup perspective, you can look at it like this. You can wait for Bitcoin to break above a certain level and you can set up a trade just like we talk about. Or you could wait for Bitcoin to break below a certain level, and then when it breaks above that level, then boom, you have an entry. For example, a plan could be that if Bitcoin falls below the uptrend here, falls below 28,545, then you have an entry price just above 28,545 for when you break back through it and you confirm a breakout back above it. And then you have a target wherever. I don't even really care too much because I prefer using the stop losses, but somewhere here, maybe at 30K. And then you just set up a couple of trades. Again, these are just kind of just fake numbers, just an example. You set up another trade, something like this, trading the market rally all the way back up here. And then on the inside of that, you could have other smaller trades that are trading more of the daily volatility. But generally speaking, you could have something like this. Or you could have a trade set up below, just above this uptrend. If we fall below the uptrend, get back above it, then we enter. But regardless, you're going to want to trade. And we'll talk about it daily here on Coffee and Crypto as this plays out. You're going to want to trade that uptrend up to 31.8. And if you're an investor, it's not a bad time to get in because I think all hell's about to break loose on the global economy in the next 3 to 5 years. As that takes place, I think a lot of that instability will lead people to realizing, wait a minute, many of the altcoins are experimental. They're not proven yet. But listen here, Bitcoin has proven itself in the pandemic. There is a huge amount of uncertainty, instability in the market. Bitcoin dropped for a day. And then it spent the next 400 growing by 1,500%. So Bitcoin, if we're honest with ourselves, not if we're doing this whole, well, Bitcoin has no intrinsic value kind of thing. It's nonsense. Humbug. Gold has no intrinsic value. If you want to say that, is worth $10 trillion in market capitalization. Bitcoin's intrinsic value is that it is uninflatable and it is uncensorable. There is definitely value in that. Don't let anybody convince you that there's no intrinsic value in it. It's a tool that many of the people that are in the very large banks, I'm talking, Fidelity, BlackRock, Vanguard, JP Morgan, Goldman Sachs, all of these want to say because they want to crash the market and buy it. Just so you know, many of the people at at JP Morgan, they realize if the market crashes, they should buy Bitcoin. Bitcoin, as a matter of fact, this is not an opinion of, it has no intrinsic value. As a matter of fact, we have history for a cataclysmic disruption to the global economy. And what did Bitcoin do? It moonshot. Now, you could say it moonshot because of the stimulus and people had extra income. Yes, they had stimulus checks, but they also didn't have jobs. So, and I'm not laughing that they didn't have jobs. I'm laughing at the idea that, they had stimulus checks, so they had extra money coming in. Of course they had extra money coming in. But they also didn't have a job many times. So that extra money was going to paying for groceries, which, by the way, were getting a lot more expensive and scarce during the pandemic. Bitcoin rallied so quickly because people were riding that wave of growth from the stock market, but also they were riding that wave of growth from the quantitative easing, but they were also riding that wave of growth on Bitcoin because they realized that Bitcoin was a hedge against this nonsense. And so many people thought that, if the pandemic was a one-off, we're going to go back to this golden age of continual exponential growth and the market's going to be great. And we're going to sing kumbaya and we're all going to get filthy, stinking rich. And Bitcoin was proven to be a profitable investment. All right. What's the next move? The next setup? The next setup in the short term is that I think Bitcoin is preparing itself for a movement above $30,000 up towards $32,000 before the year's end. I believe that Bitcoin will be trading between $32,000 and $35,000, probably closer to $35,000 by the end of the year, unless some kind of black swan event happens and it crashes it. I think Bitcoin's in a pretty strong uptrend. I could see that Bitcoin may be in too aggressive of an uptrend here. Maybe it needs to trend up like this. So maybe it needs to fall below that uptrend. Maybe it needs to set a new uptrend, whatever. But it's definitely a good place for Bitcoin to be right now. In the medium term, in the medium to longer term, over the next several years, there is disruption coming. Winter is not so much coming, but fall is coming, right? It's not winter. I'm not saying that we're going into the Great Depression, but I am saying things are going to change. They're going to change very quickly. And when things change very quickly, humans don't like that. And so two things happen. People get left behind or they adapt. They evolve or they die in the same way that you see in nature. Humans, in that regard, are much the same. You evolve or you get left behind. You learn to adapt and live with the new world, or that new world crushes you. And so we, as investors, have a choice to make. Will we get crushed by the changing times that are coming over the next 3 to 5 years, geopolitically, with the changes that are happening with China, with the changes that are happening with Russia and Ukraine, with the changes that are happening with the massive amount of industrial build-out in the United States, which if you live in the United States is, broadly speaking, probably a good thing for you because you're going to have a job. But that also leads to a lot more inflation. How are we going to handle the changes with artificial intelligence? Are we going to get run over by these changes, or are we going to evolve and adapt to them? And the best way, I'll leave this as kind of a nugget of wisdom, and then I'm going to read some chat. The best way to weather a storm is unchanging principles. I'll give you an analogy. When a hurricane comes through a remote island, and there are buildings on it, and it's a strong enough hurricane, everything is stripped down to the rock. The island is stripped of its trees, of its vegetation, of its people, of its buildings, and it's stripped bare. And the things that are immovable and unchanging, the island itself, is pretty much all that's left. It's a morbid thought. If you look at, aerial footage of Haiti after the earthquake, a force of nature comes in, just shakes and destroys everything. You look at aerial photography and videos of New Orleans after Katrina, or anywhere that's been hit by a devastating hurricane, devastating forest fire, devastating hurricane, any kind of tsunamis, force of nature like that. What's left behind is the landscape itself. And so the only way that we weather a storm is by embracing tried and true principles that do not change. Financial sovereignty, having control over the areas of your life that matter, will not change, and no storm will change that. Sustainability is a principle that goes nowhere. Marketplace service, putting value out into the market and knowing that you will be compensated for that, does not change. It's a degree of humility in that. Your family being important and ensuring that your workplace life, not your workplace life. I vehemently disagree with the idea of work life and home life. Your work and your home working together in mutually beneficial harmony. That's never going to change. That's always going to be important. Having unity with the people around you as much as you can, at least fighting for it, it's never going to change. Having the spirit of challenge is never going to change. Not being discouraged, but instead viewing every single thing that could be discouraging as a way of being challenged and growing. That's the spirit of challenge. That's not going to change. Making decisions based on fear, being a bad idea, not making decisions based on fear, having no spirit of fear, that will not change. These are unchanging principles. Having a budget, that will always be important. Having a plan for your money, that will always be important. Doing your research, that will always be important. These principles will not change. And so the very best way that you can weather and even grow during the storm that's coming over the next 3 to 5 years is to invest in sharpening the unchanging principles in your life that you're going to live by. And one of those is being able to adapt with the times. One of the unchanging principles is that you need to change with the world around you. That doesn't change, but you need to. I need to. We need to learn how to live in a world where food might be 25% more expensive. We need to learn to live in a world where artificial intelligence might put many of us out of a job, or it might make our job more efficient so long as we actually put the time into learning it. We need to learn to live in a world where Bitcoin is going to become a more dominant force of the economy. I'm not saying it's going to be 20% of world GDP. I am saying it's going to be more important than it is now. We need to learn how to live in that world. And we first start by understanding what kind of world is coming. It's good to understand what kind of storm is approaching. And then we can understand what we need to do to make the most out of that. All right, let's read some chat. Really appreciate all of you guys for tuning in today. I have the Beholders in chat. Phaedrus is in chat. Brent said, haven't been here in a little while, but it's nice to see you again, Jeb. Good to see you, Brent. 105 in Leavenworth, Washington yesterday. Way too hot. That's nuts. That's crazy. I thought 94 was hot. Golly. Bitcoin and tech ETFs. Bring it. Yes, we're going to be talking about ETFs a little bit more. Can't wait for this channel to have 5,000 live views again, like in the bull market. Won't be long, Mario. I believe it's going to be there. Donald is in chat. Said shrinkflation is here to stay. Silas E. Borg said the YouTube comment filter is strong today. I will find the weak spot. Do you think ETH will follow that rally? I think he'll follow that rally closer than the others. Chemistry is physics on an atomic level. Biology is just chemistry. Lunch is just a matter of leveraging physics to your advantage. That's true. That's wonderful. I have the Beholder, member for 23 months, almost 2 years, said, yo, Jeb, what's your go-to Lux Algo trading strategy for Bitcoin? Love it. Going to answer this and we're going to wrap out because I'm going to try and actually wrap out on time because I want to be respectful of your time. So very simply, I use the same Lux Algo strategy every single time. I look at the other parts of Lux Algo. I'm not saying there aren't other components of Lux Algo, and it is a good idea to make sure you're looking at the entire indicator. But broadly speaking, when Lux Algo gives me a buy signal, and when that buy signal is confirmed with Trend Catcher, then I have a strong reason to believe that Bitcoin is going to go to the take profit zone. The take profit zone, for example, here was sitting, and I'll just use the replay tool to show you this. When Lux Algo had a buy signal here, the take profit zone was sitting up at 28 to 34. I had strong reason to believe that it would go there. Now, it went there almost instantly. But if you zoom forward, you can see that Lux Algo was right. That might not be the best example because we went there almost instantly. But if you look at, let's say, right here, you have buy signal. Let's say right here. You have buy signal back in late December. Excuse me, I think it was actually in January. January 10th. We have a take profit. And it's confirmed. So you can see it's confirmed right here. We have a take profit up at 20,000 to 23,700. We have strong reason to believe that we're going to go there. And then we did. You can see it happening here on the chart. Same thing with the sell signals. Buy signal came into play right here. It gave us a take profit zone all the way up there. And guess what? Guess what Bitcoin did? Eventually, it went there. It didn't go there immediately. We had a sell signal in the interim, but eventually it went there. So my strategy for Lux Algo is if it gives me a confirmed buy or sell signal, especially if it's a buy signal, it's on the daily chart, on a longer-term chart, but it's important on every single chart. There's a strong likelihood that it's going to hit that take profit. And so that's where you want to actually place those trades, is in keeping with that. By the way, guys, if you guys are not worth, I was just reading out of the Beholder statement, the network for Bitcoin alone is worth trillions. If you guys are enjoying today's stream, make sure to hit that like button, subscribe to the channel, hit that post notification bell so you won't miss a single episode of Coffee and Crypto. Thank you so much. Thank you guys so much. Burn society to the ground, if for no other reason than to see what grows from its ashes. I don't think you'd want that to happen, but you know, in a movie environment, it'd be an interesting thought experiment. All right. It's true the bear market is a Bitcoin show. Alts don't get much attention. Yes, for sure. Oh, you mean Hawaii, Philly Skills said. Yeah, for sure. Exactly. What's left when a volcano erupts and flattens everything? The unchanging part of the island, which is the island itself. Adopt those principles. They don't change. They are bedrock. Shadrach Frost said, good morning and smash the like button, folks. Show love, respect, and support for the effort Jeb makes for us daily. Thank you so much, Shadrach Frost. Why do you think alts won't follow the next rally as much as ETH? I think that the alts will follow the next rally, but I think that as you go down coin market cap, they will follow in that time. You're going to see Bitcoin rally first, then you're going to see Ethereum follow it, and then you're going to see the altcoins follow that. Because as people get into the market, then they have to start to trust that, okay, Bitcoin's a great investment. All right, cool. Now, let's look at what else. Okay, maybe we'll look at the blue chips. I think there's only really about 2 blue chips in crypto right now, and that would be XRP and Ethereum, and that's because of their long track record. Then they're going to look at other things. They're going to look at the Cardanos. They're going to look at the Solanos. They're going to look at the Polkadots. They're going to look at the BNBs. They're going to look at the Polygons. They're going to look at the Avalanches. They're going to look at the Stellar Lumens. They're going to look at the Uniswaps of the world, and then that's where those will start to rally, is towards the middle part of the bull market. All right, guys. Well, I really appreciate all of you tuning in. If you enjoyed today's video, make sure to hit that like button, and don't forget about Club DeFi. If you guys want to learn more about technical analysis and how to do the analysis that we're doing here every single day on Coffee and Crypto, then I highly encourage you to go on over to Club DeFi. You can go there from bitcoinacademy.teachable.com. Go to Club DeFi, find the principles of technical analysis, and you will see that we have dozens of videos in here teaching you all about technical analysis so that you can master the art of TA and so that you can become a technical analyst that can understand where the market is and where the market is going. If you want to become a profitable trader and investor in the cryptocurrency market, technical analysis is an absolutely indispensable skill that is also not going anywhere. So I'd highly encourage you to invest in mastery of this skill that I have been growing in over the last 6 years, and which has allowed me to make a life-changing income from very humble beginnings financially to where I am today. I'm very excited to share with you Club DeFi's principles of technical analysis because I firmly believe that investing in learning the unchanging principles of technical analysis will help you to become a profitable investor and trader in the cryptocurrency market. And as I always say, the very best investment you will ever make is an investment in yourself. And in this case, the way that you do that is through investing in your education. Please make that investment. You can sign up, please, for your sake, make that investment. You can sign up with the link in the description box down below. All right, guys, as I said, I'm going to try and end on time. I'm a few minutes late. I like to talk, and obviously there's a lot I want to share with you, but we will be back tomorrow at 10 a.m. sharp. I really appreciate all of you tuning in. Before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.